Sarah Coffin. It is Wednesday, August 25th, 2021. I'm here with Chris Taylor. He's the CEO of Great Bear Resources, a stock I know you're all very familiar with. We've talked to Chris many times, and I wanted to do a sort of a longer update today. Part of it is I want Chris to go through today's results. Great Bear released over 70 holes this morning. And you know, at a big picture level, these are important results because they change the look of the LP zone, if you will. And I want Chris to go through that a bit. And then after that, I think I just want to touch on sort of the big picture, the strategy level stuff almost. You know, what does Great Bear do going forward, and what does it mean, and what's the best way to get the most value out of Dixie for Great Bear shareholders? Do you want to just start off with today's drill results, Chris, and kind of walk us through the impact those have had on the LP zone in terms of how you visualize it?
Yeah, sure. And I'll just share my screen here, and while I'm sharing, I can chat. It's funny because like we were talking about earlier, Eric, just in the preamble here before the call, you know, we just found the LP zone like just over 2 years ago. I think the first release was May of 2019, and it's amazing. Like there's 440 holes in this area now, and it's amazing to see how it's come together. So can you see my screen okay, Eric?
Yeah.
Okay, so on the right, this is the long section from our release today that I think everybody's familiar with now. And here we are just 18 months ago, and here we are 6 months ago. So what I find amazing there, like this area here, the gap area, was really what I was most excited about in this news release. And if I look at how that looked 18 months ago, you can see indeed it was just a massive hole in the drilling. Actually, right. I drew that circle in the wrong place. It should go pretty much like that. And then if you even look 6 months ago, there was just way less holes in that area. So we've been putting out drill holes for the most part. I think the majority of the holes are from this area, this sort of central LP fault zone. Like it's really obvious, like everybody sees the pink dots, they know that's 20 gram plus material. Like there's a lot of high grade in the middle of the zone, and you know that's going to be like an economic driver for the project in the future, right? So obviously we wanted to define this because it's like an engine that drives sort of the project. And of course, if you think about how this thing is going to start up, you know, that's going to be an area of interest, and we can talk about that later too. But what we did in the release today was we took out, we drilled a whole bunch more holes in that area and in this area, because there just wasn't enough drilling, and there's still not enough drilling in these areas. But, you know, the difference is that now instead of having drill density only in the middle, now you've got similar drill density here and emerging drill density there. And like if you look at these areas and you think about where the extra gold has come on, like look at the difference all around here and look at that area filling in down there. And then, you know, you look at all the extra drilling that's in that location and look at it there, because these are the drill traces that we included in this release. And then you can see there's extra drilling going on here and extra drilling going on here. So, I mean, Eric, you've been in the business a long time. When you see this kind of pattern being developed with the drill holes, what does that make you think of?
Yeah, I mean, that's what your that's what your pit's going to look like. I mean, it's pretty obvious, and obviously being able to, you know, not ignore gap to pull it all into one thing, it's important. And you know, I'm getting ahead of the drilling here, but it looks like the grade is in fact increasing for whatever reason. It looks like the higher grade stuff is deeper at gap, so it may actually still be there. It's just a little bit farther down. Do you want to comment too on the domain arrows that you got there? I mean, how important is that to the process that you're starting to undertake now?
These pink arrows here, like that stuff there. Yeah, those are important as we go deeper. right? So in the near surface, like I think some of the very best results we've drilled are like here. I think there
Right.
was like an ounce over 20 meters, right in the middle of that slab of high grade there. We call that the Oro2 domain. And it's kind of like shooting the side of a barn when you're
Right.
doing the shallow drilling as you go along this thing. But as you go down to depth, like, I think that there's an overall kind of rake on the system in this orientation from what we've been seeing.
Right.
And that's consistent with a lot of the data that we're looking at here. But as you go down to depth, like by the time we drilled these holes, like that hole, by the time you hit down at that level, it takes you an entire month to drill that hole. So,
Right.
you really want to make sure you use like all the data measurements. We had 65,000 oriented core measurements from the drilling at the LP so far. And
Right.
what that's doing is it's letting us see that these plunges exist. And, as you go down to depth, you want to make sure that you're adding ounces like as efficiently as possible. And you're not wasting time on deep drill holes. Like as you go down below the gap, for instance, like, there's evidence that there's a plunge going this way, evidence of a plunge going that way. There's minor plunges, like I would describe the bigger plunges as headed this way, and minor plunges within the zone headed, straight down and headed this way. So the macroscopic sense, and that's really because there's some folding and attenuation of the system, and you get different intersection angles between the structures and the geology, right?
Okay.
Yeah.
So I mean, the bottom line here is you've made what might have been 2 or however many, theoretical pits is probably one big theoretical pit now, because you don't have to sort of mine around the gap zone, if you will. You might not throw it in the mill right away, but you'd be mining it, which makes things a lot more efficient.
On this image here, you think about the Red Lake gold mine on the left. Well, there's a 3 million ounce, 3 gram per ton open pit, defined in about that area. It's actually under Balmerton, and it's never been mined because it's just they've got houses and infrastructure built all over the place. So if you were to find the Red Lake mine today, you would be considering an open pit operation with underground progressing after that. And it's just the standard in the industry today because of cost efficiency. That's the most likely approach that an engineering group modeling this would take. And of course, the underground, it's like, you think of us defining pretty much the maiden resources that come out of the LP are going to be in that area there. But what about everything else? If we look at a similar area at the Red Lake mine, it would just be a much smaller portion than the entirety. And the main part of the mine, including the high grade zone, would be like untapped, at this point with Great Bear. We're just starting to do that deeper drilling now.
Right. And that's kind of where I want to go next here. I mean, I sent out an update today that didn't make everybody happy. And I think people were maybe reading the wrong things into it. And I partially to clarify my own update, but also to kind of get at a strategic level, a big picture level, to get across the idea of how these things generally move forward. And this picture is a good one for that, I think, because when you look at the Red Lake mine, when you look at those, the mineralization, the wireframes there, the reds and the grays, what's mined and what isn't. Keep in mind that the drilling that created those wireframes took place over decades, like literally decades and decades and decades to get to that. Things are going incredibly fast at LP. But even so, you've got what, 14 kilometers of deep structure to deal with. I mean, you're not going to try to drill all of this off before you push things to the next level. It would literally take you, I don't even know how long, a decade, probably more than a decade to literally drill off LP. Like there's a point at which you got to say, we know it's there. It would be nice to have it all defined, but does it really make sense to issue 100 million shares to drill 20 million meters rather than issuing 30 million shares and sticking a mill on it? I can tell you which one the numbers are going to look better for. I don't even have to do the math. I've been doing this long enough. So you're not quite there, but you're kind of at that point. I mean, and the other thing I want to touch on is, we always say this is tier 1, and I think you defined it before, but I just want to have it defined as part of this conversation. What's the industry standard definition of of a tier one gold deposit? Let's start there.
It's like I'm not sure there is an industry standard, Eric. I think
Right,
generally there's a couple of tier one categories. The main one though is having more than 5 million ounces of mineable resource and a more than 10-year mine life. I mean, those deposits are exceptionally rare.
right,
We haven't seen a new one pop out recently, and that's the expectation with us for sure.
yeah,
And there's different types of tier one based on the number of ounces produced a year. So there's
right,
conventional tier one is 500,000 ounces a year for 10 years. That gets your 5 million ounces. There's some groups use a tier 1B category, which is more than 5 million ounces a year, more than 10 years of production, but it's 300 to 500,000 ounces a year of production.
right,
And that's sort of between the tier one and the tier two, and tier two would be less than 5 million ounces and less than 500,000 ounces a year. So you could see there's variation all across the spectrum. And I'd say the expectation here is that we are one of the rare projects that can hit that tier one category.
right. And just to, I'm going to expound on this a little bit because because legally Chris can't, because there's no 43101 out, and I'm not going to get terribly specific either. I'm just going to remind people what these numbers look like in practice. If you're looking at 500,000 ounces a year, let's talk in Canadian pesos since it's in Red Lake.
Huh.
I mean, you're talking over $1 billion top line. If you look at the middle of the LP fault in this diagram, you take a look at those bubbles. I don't know what your average grade is going to be in terms of mine grade once you take dilution, everything into account, but you're not talking a gram per ton, that's for damn sure. You're probably talking 3 or 4. If you're open pit mining something like that, even if you're not talking like gigantic South American scale, you're talking enough to get 500,000 ounces out, your cash cost is going to be really low. Your cash flow is going to be really high. I think people got spooked when I commented on the tier one size. I went, oh my God, it's only that many ounces. Well, no, that somewhere in that range is what will be defined for the initial economics. But understand, with those parameters, the initial economics are going to be quite large. NPV is going to be really big, bigger than I think a lot of people are assuming. And a tier one mine, quite often they go for more than NPV because the buyer is not just looking at today's NPV. Yes, that's the basis for price, but if someone's going to bid, they're also looking at, okay, yeah, I know this is what the first 10 years looks like. What is the next 10 or 20 or 30 or who knows what? That all gets factored in at some level, especially in a situation where you're effectively looking at an auction situation, which I personally think is what would happen with Dixie. Somebody makes a bid, somebody's going to be 20 minutes behind them making the next one, and off you go.
Well, I'd say like this is funny, right? Like this is on the left, you have one of the best gold mines in the world, right? The Red Lake mine was one of the most profitable operations on the planet. Like under McEwen's tenure, when the high grade zone was discovered, there's the high grade zone. That thing was one of the most profitable mines, and it never would have met that tier one criteria for decades and decades of production because it doesn't have that bulk sort of capacity. So it was producing a whole pile of ounces once it got into this pencil of high grade here, but other than that, I mean, it was just a long-term steady producer at really nice grades. And we certainly have that capacity if you look at what the grades and widths that we've generated, and it's all the way open. But it would have been years into the development of that project before you started seeing these areas of the project that it was even a really significant gold mine in that sense. Whereas like you've worked in the area, Eric, you kind of know the history personally. And the difference is that, it's that bulk potential over the top of the system, and really the grade, the combination of bulk characteristics and grade are just they're not normal with what we have, right? It's extremely abnormal for the industry.
And I mean, the temptation, I realize for a lot of people, the temptation is always going to be, more ounces, more ounces, more ounces, and you'll get there. But at a strategic level, as a management group, I mean, what's the trade-off for you now? I mean, you've got a crap load of gold already. You've got 440 drill holes into this thing. There's a bunch of holes into limb and hinge. At what point do you feel like you got to take it to the next level in terms of the next level of development?
Well, I think we have comfort that we're going we're going to deliver a very nice initial maiden resource. We got a lot of data to work with now, and we're pretty good with data. So we got a lot of comfort there. And really, there's a lot of work that goes on under the hood that people don't see. Like it's the permitting, the consultation work that we're doing. All the claims, they get converted to mining leases. That takes some time. There's a lot of baseline work now, environmental, biological surveys going on. There's looking at the power situation, is the power line that runs through usable as is? Can we just tap right in, or do we need to upgrade a portion of it? I mean, none of these are expensive items individually, because we're sitting with such excellent infrastructure, but it's all being worked on, and it's all advancing the project in its own way. You tend to hear about these things after the delivery of initial resources, and then you go through the PEA process, and then we start talking more earnestly about how the project's advancing. The real case here is that, any company, the industry as a whole, looking at this they don't just see that, that's not the gold that they see. That's the gold that they see when they look at this thing, right? Or they think about the Hemlo comparison, and they think about, they've already started to hit it deeper, and you're seeing it here. What is this going to look like, and how quickly are we going to, if any company, Great Bear or others, are investing in building a mine here, how quick does it pay back, and what does that look like over the long term? We're starting to get a very good idea on what those scenarios look like, and they look great.
And I guess, like, for you and for anybody looking at it, any of the big companies or any retail guys for that matter, the trade-off here is, how much longer do you drill? Is it better to take dilution to start cash flow, or is it better to take dilution to just kind of add ounces and add ounces and add ounces, ad nauseum for the next 10 or 15 years? I mean, I know what my vote is. I think the time has come to push it forward, but in the meantime, you are starting phase 2. I think just based on, where you're going to be drilling, and maybe you can talk to us a little bit about that. There's probably room for some sexier drill holes just based on where you're probably drilling, but also, maybe a comment on, where do hinge and limb that, some people have probably all but forgotten about, where do those come into the picture? I mean, if we're thinking about this open pit, does that just kind of put them to the side, or how does all this come into the mix, do you think?
Okay, so remind me of all those questions when I finish answering the first one, because I'm 100% going to forget. But we have stuff like this, like in the Vigo area. We announced some of that today. We saw very similar geology and similar gold mineralization another kilometer over this way. We call it the Rice Lake area. So that's an area that needs to be tested. And then we've got another 6 kilometers of drilling that we've done over in that direction, hitting the same kind of rocks. So you're going to be grafting on additional gold on the project, sort of ad nauseum on a go forward basis. But what has immediate benefit is probably, thinking about what we can add around these areas as we construct these plunges. And then, of course, more hits at depth, along here. We'll start building out these panels of mineralization as well, because that's going to be, underground type targets, right? So, and then the Dixie Limb and the Hinge, I think I've remembered your question. First off, on the other phase 2, there's going to be other targets that we've identified around the project too that need to be drilled. But then on the Dixie Limb and the Hinge zone, we haven't done a lot of drilling on them recently, but it's likely, this is my view, because I've worked in a number of mines in my career. It's very tempting to think that you would have an operation start at the LP fault. It's all hypothetical, of course, because it's not, we haven't even released the resource yet, but likely you have an operation that starts in the middle of the LP fault zone, expands outwards from there, and maybe a couple of years into that process, using the fact that you've paid for everything you've done already, and you've got all this wonderful hypothetical cash flow, you'd use that money to go down on the Dixie Limb, and then from underground, it would be wonderful. Wouldn't it be wonderful to be drilling the Hinge zone off from underground and mining at the Dixie Limb at the same time, and drilling under the LP fault at the same time? That's a great, because of the central position, a great way to hit these other underground targets and define resource on an ongoing basis. And then you start to have this picture emerge, down below everything. So that's a scenario. And if you're mining from the limb, and the hinge, you're blending that material with stuff from the LP over the long term,
Right.
and you can maintain targets on ounces. But I mean, it's all hypothetical.
Yeah.
We have to release the studies, but that's why it's an appealing project for the mining people of the world, is because they see those kind of possibilities, right? They see the predictability and the clear underground potential below where we've drilled now, or where we've drilled down at the LP fault and at the Dixie Limb, the hinge zone, arrow zone. They see the expansion potential elsewhere along strike on the LP, and of course we've got a bunch of other targets that we have. So it's a kind of process that once it gets going, I think it could grow for years and years and years. And that's the goal, top part of the project, something like that, underground for many, many years afterwards, you get something like that. The initial value of Great Bear is probably dominantly on that side. And the upside value is a significant potential for a mine complex, going down to depth, however long and far that goes.
Yeah, no, I mean, I did, one of the things I did point out to people earlier today is I've thought for a long time, and it's become even more evident in the last year, in all likelihood, Dixie is going to be something that goes for a long, long time, decades and decades and decades. And that's obviously not just important in terms of valuation, although, I keep reminding people that when you're adding ounces in year 20 and year 30, it doesn't have a hell of a lot of impact on the NPV today. What I think it does have an impact on is actually at a political level, where people knowing, because mines are famous for being, boom and bust, here today, gone tomorrow. You're showing people a plan where they get to understand that, no, this could be, like another Red Lake mine, it could be here for 30 or 40 or 50 years. That changes, I think it changes permitting significantly, and I think it makes your life a hell of a lot easier at a permitting level, because that's the kind of mine everybody wants, the one that keeps their town going for another generation. And I think Dixie has that kind of potential. I know you can't, this is one of many things you can't really talk about, because I'm pretty sure you've got CAs as far as I can see, but I think it's, it's fair to say that there's more than a few people breathing down your neck these days.
That's a loaded question, Eric.
Yeah. Well, I'm not saying somebody's waving anything specific, just that you're probably getting a lot of guys bugging you for data, and what's this, what's that, is this in the data room, that kind of stuff.
It's been a busy summer, I have to say, for a lot of reasons. We have not evaded notice in the industry. The funny part is, there's so much data that we've published now that if you're an analyst or you're a resource modeler anywhere in the industry, there's enough data to take a pretty good crack at it. And that's just the downloadable stuff on our website. And, it's amazing that, we have, you think about the technical teams that are available to a major, it might be 30, it might be 50, it might be 80 technical people that do valuations like this on a day-to-day basis. Those guys understand the implications of something that we have found. And, it's a little bit funny in this sense that, I look around the marketplace today and I see companies that are significantly smaller in terms of the potential of the project or what they've delivered, in the near term, with substantially larger market caps than us. And I think that's the opportunity in Great Bear, is that, the proof is in the pudding at the end of the day. And, if it is, if it's going to deliver a tier 1 type asset, and, we have to show that it would, but if it's going to do that, there just aren't any comparables that are coming online in the near term. So it shows you that, if you had an entire team of technical experts at your disposal, you'd have a pretty good feel for how this thing is going to lay out. And I don't think that's the kind of thing that the average investor has access to, right?
Yeah, no, I think things have gone great. I mean, notwithstanding the share price pulling back a bit, it's been nothing but good news for 3 years now from you guys. So I don't see any reason for anybody to be disappointed about the way things are advancing. Hopefully the market's going to take care of itself as we go forward. Thanks for taking the time again today, Chris. I was always happy to talk to you, and I love your squiggles. So
yeah, thanks.
I think everybody else does too.